No, are you recording this?
Yeah, we are. It's automatic. It's automatically doing it.
Cool.
Well, hello and good afternoon to everyone. Welcome to the Howard County Chamber's PPP or Paycheck Protection Program webinar this evening. I know that many of you are starting to file in, and so we'll wait just a few moments before I go and actually introduce our panelists and so forth. We've got a great program that is scheduled, and certainly these guys truly know this for the most part, I would say backwards and forwards, and have had a lot of experience here. And so, excuse me, looking forward to the insights that they will share. And Patrick has just also posted his information here in the chat, and it's also going to be on the last slide as well. And so let's see here. With that, again, I want to thank all of you for joining us. And because there is a lot that we want to cover, I'm going to go on and just get us started here. And so again, I'm Leonardo McClarty. I'm the president of the Howard County Chamber, and like to welcome each of you this afternoon. And actually, I think this is our first webinar for the year of this new year. And so again, thank you all for tuning in. Also want to recognize our annual partners for this year. As you can see on the logos behind me, certainly we're fortunate to have a lot of our sponsors from the previous years returning back, and certainly thank them for their continued support and all that they do for the Howard County Chamber, as well as also for the Howard County community as well. And so in essence, we've got some slides we're going to share, but really we want this to also be, I guess, as interactive as a webinar can be. And so so definitely Mike and Patrick are going to make sure that you have ample opportunity to ask questions. I'm going to ask that you use the Q&A feature as opposed to the chat, as it just makes it a little bit easier for us to separate perhaps conversations from questions that you might have. And so with that, I'm going to introduce to you our speakers for today. And so first we have Patrick Shurney, who ultimately, Patrick helps business owners, CEOs, and nonprofit executives simplify the loan application process, save money and save time and money, and obtain loans at the best rate and terms available. As he likes to say, it's not only about the loan, but it's also about helping you with strategies to best deploy capital. He has over 30 years in finance and banking, and has been around the Howard County, Central Maryland area, from Annapolis to Montgomery County, and certainly has a wealth of experience and knowledge that he will lend to us today. Next, we have Mike Muscatello, who serves as the lead audit partner in Aronson's Government Contracting Services Group, where he provides thoughtful business, accounting, and tax solutions to government contractors, technology companies, professional service firms, and life science companies. He has over 25 years in the industry, assisting clients, as a keen technical resource in insurance, tax, consulting disciplines, and extensive experience, again, in government cost principles. And so both of these guys have very extensive backgrounds and experience. And so with that, it's my pleasure to turn things over to both Mike and Patrick, and I'm going to share my screen here and we'll get started.
Thank you, Leonardo. Good to be with you. And Mike, good to see you again. Mike and I served on the board together, and remember fondly when Leonardo became our CEO and president, and you've been amazing, my friend, as a CEO. So really appreciate that, what you're doing. Hopefully everybody there can see that. So, you're doing your typical webinar or Zoom meeting. I've set my dogs on bark. I'm making sure my wife was walking around in the bathrobe, doing everything I can to, get interrupted. No, just kidding. But if that happens, and you get interrupted on things, not a problem. We're all used to that now. But as Leonardo said, my name is Patrick Shurney, and I'm the loan consultant. So I just leverage my 30 years in banking now. I just help clients with obtaining capital, and I consult with them too, because once you get the money, what are you going to do with it? So that's what I do. And Mike and I are just going to kind of go back and forth. So I'd like to know that you're here. You don't have to ask a question, but just go ahead and say hello in the chat. That way we know you're here. And then we'd like you to put your questions in the Q&A. And I know about when I'm on one of these calls, I can tend to zoom out. So I like to get questions going as soon as possible and start answering things. I don't mind being a little random. We're not going to give you 20 minutes of talking and then hopefully you get your questions answered. We want to get them answered up front. So just say hello in chat that we know you're here. And I see you, Neil, so that's good. And we got Judy and we've got Michael Shaw and we got Lee. So a bunch of folks, Judy, I said so, and Vanette and others, maybe I'm pronouncing that name wrong, but anyway, welcome, welcome, welcome. Okay, so let's go to the first slide. The biggest question everybody probably has, if you haven't gotten answered it, is do I qualify? So the $900 billion stimulus package has so much in it. And I don't want to say only 284 billion because, you know, it's like, oh, I can only live on 284 billion. What will I do? 284 billion is going into PPP, but there's a ton of other stuff. And so we have a lot of resources for you. There's stuff that's going to the states, going to the local, going to Anne Arundel, Howard County, you know, these local jurisdictions that we're in, economic development, things like that. So as long as you have less than 300 employees, you don't have to worry about anything. Hey, Connie, we see you. Thanks for joining. And, you know, as long as you have less than 300 employees, if you have more than one location, there's some nuances. We can take that as a one-off question, but I'm just going to go past that. All of these things have deeper points to them. But the biggest thing is that you have a gross income drop. Not that you wanted that, but that's probably what happened in 2020. So you'll take your worst quarter of 2020, compare it to the exact same quarter of 2019. And if you had a 25% drop, you're going to get the same amount of PPP again in the second round. Banks are starting to open up now. Within the next week, all of them will be open. So don't freak out if you haven't got your application in. And that's really the qualification. If you didn't have a 25% drop in any one quarter, but annually in 2020 was 25% less than 2019, mathematically, I don't know how that would work, but if you didn't have a 25% drop in one quarter, maybe Mike can show me the math, but an annual drop also qualifies you. So it's really cool. We'll talk about, you know, how easy that is, but I think the CPA lobby and the bank lobby really tried to make this as easy as possible, not just on you, but also on them the second time around. So there's a few qualifications, like I said, we'll get to, but mainly, you know, you have to have used all of the money from PPP round one before you can take the money in round two. You can still apply for forgiveness if you haven't used all the, I mean, you can apply for forgiveness once you've used all the money. So we can kind of help you with that one-off, or your accounting partner can help you with that one-off. We get a lot of questions about that. So I don't know that we have any questions in the chat yet about those things, but I just want to pause there and let you ask a question. Do you have any concerns about whether or not you qualify? And let's just open that up real quick. And then Mike or I can take that question. So any concerns about if you qualify? We play some Jeopardy music and give 10 seconds to write down your answer, but.
So Patrick, while we're getting some of the questions from the attendees here, is the way that this works is both PPP1 and PPP2 are opening up. So if you did not receive PPP1 funds, you are now eligible to receive PPP1 funds and would submit that application. If you've received PPP1 funds and return them for some reason, or partially return them, you will actually be eligible to take those funds back out. And then once the funds are used, apply for the PPP2. So there's a couple different options and strategies that companies have in order to take advantage of the program lawfully. But I just wanted to point out that there are options here, and like I said, there's potentially two programs that could become available to people.
Thank you. We got a question from Neil, and it says, how do you define gross receipts? So I'm going to type it in the chat, but Mike, why don't you give them the generally accepted accounting principles answer to that question?
Well, you know, it's kind of interesting. When I went through the IFRs, they actually referred to the SBA regulations. And when you look at the SBA regulations, what it talks about is line 1 on your income tax returns. Okay. So depending on whether you're a cash or an accrual filer, that will determine, what your gross receipts are. So if you look to your income tax returns and how you calculate that revenue or those gross receipts, that's how you would determine the 25% drop.
Yeah, and so typically gross receipts are, if there's returns and allowances, that's usually taken off of gross receipts. But, if you got a PPP loan, if you got SBA idle grants or local grants, that's, so let me back up. If you got a PPP loan or an SBA idle loan or grant, that's not part of gross receipts. For a lot of nonprofits or from some other people, they might have gotten some grants from local jurisdictions for PPE and things like that. We're still trying to get clarification. That may actually be considered part of your gross receipts. So we have to get more clarification on that because grants typically are considered income. But since they're COVID related grants with some of these jurisdictions, I'm hoping that we'll get further guidance on that. So
Yep.
for now, Neil, that's the answer. Just use your typical gross receipts.
Yeah. So Patrick, and then just to qualify, for those of you that collect sales taxes or any other kind of taxes that's remitted to a taxing authority, that would not be counted as a gross receipt.
Right.
So just be careful when you make those calculations.
Yeah. And again, you'll have my email and Mike's. You can email us as questions. You can talk to your accounting partner, things like that. So we're not just going to help you today. Part of being part of this is we'll give you continued support. And I did the same thing back in March and April when this happened. And I'm pretty responsive with emails. And if I don't know the answer, we'll connect you with someone that does. So, Michael, I'm going to get to your question in the presentation. It says, what about drops in employee FTE? So hang on, we're going to get to your question. Vinette, if I'm saying that name correctly, asked, how do you calculate your PPP-1 loan is consumed? Is it only payroll cost calculated? Bank balance would obviously be higher. So PPP calculation for PPP-1, you had 8 to 24 weeks to use that money. And remember how you got PPP the first round? You took your average monthly payroll, you times it by 2.5. And that's what you sent to the bank. And unless you're in the restaurant entertainment industry, if you qualify for PPP2, you're going to get the same amount. So when you ask for forgiveness, I have a separate section on that. So I'm going to come to that. But basically, you've got your payroll records. You were allowed to spend the money on things like rent and loan interest and things like that. So, you'll be able to look. And if you use a payroll service, they're helpful with that. If you have an accountant, they're helpful with some of that. Or I can answer about your situation specifically. But it's more than just payroll. Payroll had to be 60%, but you could use it for other things. So, Vinette, I hope that answers your question.
Right. So things like rent, mortgage insurance, and also I think, Patrick, you're going to go over the additional covered expenses that were allocated with this legislation.
So let's do that. Let's hit a couple of these here, and that might answer some of your questions, but keep them coming. That's really good. And we'll pause. Quick more questions in the chat. I'm going to go through a few more points of the presentation. This is not a 50-page PowerPoint. It's like 3 or 4 pages. So it's designed that way for interaction. There's this necessity test. And it's basically, I don't think it's that clearly defined. It just says, look, under penalties of perjury, I really feel like it's necessary to take PPP2 or second draw, as it's called, to support ongoing operations. Now, that could be just to not go out of business. You could use it to say just to break even, or to say I'd like to make a profit. So I think it's a very wide, and to be honest with you, if you know what's going to happen in 2021, then you should just post that somewhere and be a billionaire, because nobody knows what's going to happen in 2021. Nobody knew what was going to happen in 2020. Maybe God Almighty, right? Of course. But other than that, I mean, to me, if you qualify for PPP round 2, I mean, I don't know why you wouldn't put your application in. I mean, we can't tell the future. We just don't know what's going to happen. Okay, so there is some thresholds here. $2 million threshold is typical. There is a $4 million if you have multiple locations. But this time, if you're a publicly traded company and things like that, they're not going to be able to get the money this time. So we think that the money will run out quickly, but it's not going to go in gigantic chunks like before. So we are going to encourage you to apply. You have until March 31st, but I think by the end of this month, everybody's going to pretty much try to get their application in. And so, like I said, it's the same as last time. If your payroll did not go up in 2020, and it probably didn't if your revenue went down 25%, right? So if your payroll didn't go up in 2020, you're just going to use the same information you gave your bank last time. Like, how cool is that, right? So your bank already has your payroll records from 2019. Let's say you got 80 grand and you had a 25% drop in revenue this year in one of the quarters. You already know you're going to get 80 grand. The bank's going to want to make sure you apply for forgiveness, which they're taking those applications. But you don't have to apply for forgiveness in order to apply for PPP second draw. You just have to have used the money, because forgiveness is going to be a little bit of a lumpy process because the banks and the SBA are getting overwhelmed with this stuff. So I'll come back to that at the end of the presentation and restate that. And this time, Mike, they can use it for some other things, right?
That's right. So this time, Patrick, they added, and I'll read through the things, covered operations expenditures, covered property damage costs, covered supplier costs, and covered worker protection expenditures. I'm not going to go through in detail what these are, but they're pretty self-explanatory. Covered operations expenditures, if you had to make investments in order to keep your operations going, say in IT, cloud accounting services or software, facilities, so on and so forth, those expenditures would be covered. Any vandalism or looting due to public disturbances would be covered.
Yeah, so other things. Hey, Joan asked a question. She goes, what if you didn't apply for PPP the first round? If you qualify for round 2, you can apply. And if you qualified for round 1 and didn't apply, you can actually still apply. Yeah. Right, Mike?
That's right.
Yeah. It's like how Mike and I play off of each other. Right, Mike? Back to you in New York, wherever you are. I'm in Columbia, Maryland. I don't know where Mike is, but I like your blue wall back there, buddy.
Thanks, man.
Okay, so let's go ahead and advance to the next slide. Let's slide into the next slide. All right. So the first time PPP came out, all the money went and it was gone really fast. So they issued more money. That didn't get used. There's 138 billion of the first round that was unused, which kind of is mind-boggling to me. So now the government didn't say that they saved that money and are putting it in round 2. I don't know where that money went. Mike, do you?
No, I sure don't.
I know the government's a use it or lose it type of mentality, right? So
that's right.
maybe just check the kind of cars that the government workers are driving. No,
maybe we reduce the deficit some.
Yeah. Oh, right. Yeah. Went to the deficit. Okay. So if you're in hospitality related businesses, you probably know this. If your NAICS code starts with a 72, it's that, what is it, a 6-digit, 5-digit number? I forget. If it starts with a 72, you don't have to do anything extra either for 2019. They've already got your payroll tax information. They're just going to times it by 3.5 instead of 2.5, right? So it's nice. So you get a little bit extra more, even though you've been crushed. It's not going to, and I tell everybody, the meteor that crashed into your business and blew a gigantic hole, none of these programs are going to fill them, but it's going to help. So they're doing some things for that, but there's some special programs right here in Howard County for restaurant and entertainment. I want to make sure you take note of them. Stay connected to both the chamber, because they post stuff all the time. They're great about it, with Leonardo and his staff, and also Larry Tweel over at Howard County Economic Development. A lot of the money goes from the feds to the states, and then the states are kicking it to the local. And so I would link up to both of those organizations and make sure that you know what's going on, because they're going to let you know. Let's say you screwed up or something happened and maybe didn't screw up and you didn't use all the PPP money in the first round or the second round. You're like, oh crap, do I have to pay it back? Yes, but other than your parents, it's the best loan you'll ever get, unless you have awful parents. So if it turned into a loan, it's 100% guaranteed by the government. There's no collateral, no personal guarantees. It's 1% interest over 5 years. Now, this doesn't mean you can game the system to go get a cheap loan, but if it turns into a loan, they've made it pretty palatable, right, Mike?
Yes, they have.
Yeah, I think so. So,
so it'll be a 5 year on the new loans after June 4th. It'll be a 5-year term. So at 1% interest. So, cost of money is cheap.
Yeah, I'm going to hit these 3 other bullets, and then we're going to go back to the Q&A. So if you have another question, throw it in the Q&A. We're going to nail it next. If you have other businesses, you have to disclose that, right? So, because there's a common ownership typically. So just know if you have multiple businesses, when you fill out the form, it's going to ask you about that. If you have questions, again, you can check with us or your CPA. You cannot be presently delinquent on any SBA or federal guaranteed loan, which I believe would include student loans. Now, of course, they extended the payments on most all SBA loans and student loans for like 6 months. So it was probably hard to be delinquent, but I don't like this. And this is going to be my editorializing here, because 2020 was hellish. And if you did fall behind on an SBA loan or a student loan and you hadn't been delinquent before, it just feels like salt in the wound here not to be able to be eligible for PPP. So if that's your case, I think you hear that, I think you should let your local representatives know, and we should elevate that up, because what typically happens is many things that come out, if there's a lot of outcry from the community, it gets fixed in the next round. So I personally don't like this rule. It doesn't apply to a lot of people, but I just thought I would add that. Faith-based organizations are not excluded. Double negative, I know. I wanted to say included, but then I was like, well, you have to meet some criteria. So I could have said it either way. But basically, I love the fact that nonprofits, like I'm the chair of a local nonprofit, nonprofits, faith-based organizations, even our chamber, which the first round they said they couldn't, but now they fixed that. Chambers of commerce were left out of PPP round 1, and there was a huge outcry. And then, Mike, what happened in PP2? They made them retroactive, right?
That's right. And the good thing of this, I'm on the board of or at least I was on the board until the end of the year of a school that had a religious orientation to it, and they were actually eligible in the first round, and if they meet the 25% reduction, they'll be eligible in the second round. So if you serve on a board of a nonprofit organization, definitely ask the questions to be sure that they're taking advantage of what's eligible for them.
Yeah, and I just want to pause and tell all of you that this is not just only for you and your business. Like, you have your favorite restaurants. I think about I went to my dry cleaner and I said, did you apply for PPP or any of the Howard County programs? No. I went to my local favorite ice cream place, I won't name it, and he hadn't applied for any of this stuff. And so a lot of times the small businesses are just not applying for this thing. And also people in the gigging economy. My son has a regular job, but he also probably makes a good percentage of his income as a professional musician, and you can, I don't want to put a commercial in for him, but you can catch him live around town, at different last name than mine. But he qualified for a lot of these things. And so I put in here SBA idle. I'm going to come back to that separately, but that's a big deal. And I'm going to address that separately. So Mike, let's go to the Q&A. What do we have in there?
So do you want to expand a little bit, Patrick, on the freelance contractors? Judy was asking, our business uses freelance contractors. Are we able to apply for PPP? So Judy, to answer that question, if you're hiring independent contractors, those independent contractors are not eligible to be claimed as expenses for the PPP program. However, there's nothing what can happen is the independent contractors can file for PPP themselves.
Yeah, that's how it works. I'll tell you what a lot of people did, or what you might want to do, because this is probably not the last round. Some people that you paid as independent contractors, you might want to bring them on as W-2s. I'm seeing a lot of businesses do that because they're like, here's what happened. This is the sad part. The business didn't get to claim them as independent contractors. And then the independent contractors just said, it's too much of a hassle, and they didn't apply. So it was a double miss. It sucked. It's terrible. I helped a lot of independent contractors, artists, musicians, all kinds of people. So think about your relatives. Think about all the people you didn't see at Thanksgiving and Christmas, but have businesses, right? These are those people in the gigging economy and the independent contractors. So hopefully that answers your question. But if they're 1099, you can't claim them, but please encourage them to apply. And then you might want to consider talking to your tax consultant, whether you not want to make them W-2s in 2021, because a lot of people are predicting that we're going to have more rounds of stimulus, but we don't know that. Vanette has a couple of questions there. Mike, you want to tackle that first one?
Sure. So Vanette's question: how do you calculate if your PPP1 loan is consumed?
We talked about that a little bit.
Yeah, we talked about that one. Bank balance will obviously be higher. So remember that you need to expend it on qualified expenses: the payroll, mortgage interest, rent, utilities, and if you receive that PPP1 loan anywhere before the fourth quarter, by definition, you would have exhausted that loan if you met the FTE requirement. I won't get into the details of why, but if you would be, so you can So you can go ahead and do that calculation to ensure that you've used it, but I would go ahead and also apply for the second round loan.
And then what was the question? Now she had another one on a yearly basis. Yeah.
On a quarterly basis, how do you do it? If you have the accounting records to do it on a quarterly basis, then you can do it. On the quarterly basis, you'd have to adjust those accounting records to be equal to your tax method of accounting. So that's one way to do it. But the reason that they put the annual amount in there is because some small businesses won't have the quarterly records. So you can also do that calculation on an annual basis.
And then great question here about affiliated entities, the 2 million cap and the 4 million cap. Mike, do you have a clarity on that?
So, you know, my advice is consult with an advisor, either an accountant, somebody like Patrick, or your attorney, in order to look at the affiliation rules, because they are complex. I can go through here in just a second, Patrick, and kind of give the.
I'll write the answer.
If you don't,
yeah, I'm writing the answer in, so that way you guys have this. You'll actually have a copy of the chat. Just think about the 2 million cap. It's higher than that, but it gets a little more complex. So if yours is more than 2 million, it depends. There's organizational structures and some things that get a little more complex.
And depending on what you're doing, you look at the employees at either the 300 level or the 500 level per. Well, this is the per location rules.
It's a per location, right? But you could have a corporate structure. So, hey, let's move into the documentation requirements. I put a little smiley face emoji there. So, you know, we talked about this. If you, unless you had more payroll in 2020, I had one client I helped the other day that did, but most people, you know, they had a really bad first quarter, but then they ended the year really pretty strong and they hired more people. And so they're like, I feel kind of weird. Should I apply for it? And I said, well, yeah, you're allowed to. So they applied for the PPP, but their 2020 payroll was higher. But most people, their 2020 payroll was not higher. So the bank already has your 2019 information. You're going to go in the applications we have at the end of this PowerPoint. Actually, if the person that's doing the PowerPoint, just scan to the very end where it shows all the links and then come back to this page. But there's links to the application. The bank's going to want you to upload it, and you're not going to have to do a bunch of more paperwork, which is really good. And the bank's happy about that too. So the $150,000 rule is really cool. We were telling everybody in round one, don't rush to do your PPP one repayment because they keep making changes. So now they have this simplified one-page application, which you're going to want to keep for at least 4 years, because believe it or not, this is not just the IRS that knows about this. This went under the Freedom of Information Act. So all the information that you submitted is out there and people can see it, which means people could audit, people could do frivolous lawsuits. So we're just telling everybody, keep your records for 4 years, you know, minimum. So there's a one-page application. If it's under 150 grand, you know, for your repayment, that's really great. And then for the new PPP, I know it gets confusing. If it's under 150, you don't even have to prove the 25% reduction. But before you go, all right, when you ask for forgiveness, you're going to have to show them the 25% reduction. So I wouldn't suggest nobody on this call, of course, would game the system, but you'll probably be at some virtual party because you can't have a real party somewhere. And someone will be like, oh yeah, I tricked the system. And you're like, okay, well, good luck with that. So if your PPP is over 150, you got to show them the 25% reduction. Not a big deal. Print off a P&L from maybe it was second quarter 2020, your P&L from second quarter of 2019. Here's my 25% reduction. I'm good. So the banks are going to accept those. Any other comment on that, Mike? Does that sound right? Correct me if I'm wrong.
That sounds exactly right. Hey, Patrick, I would just want to float out a question here while we're at a pause. Did anyone receive an EIDL advance or EIDL loan? Because there are some new developments in that area too.
Yeah, if you had that, so we're gonna talk about that a little bit. The EIDL. So let's back up. You probably heard about that. So prior to all this crap happening, rewind the tape to January 2020, right? The only game in town for a disaster was this SBA program called the Economic Injury Disaster Loan. Think of like Hurricane Katrina. let's say you were down in New Orleans, you had a business, and the roof got blown off of your business and you needed money fast. So the SBA EIDL program was there, boom, real quick. Well, it was the only game in town. So back in March and April, they got crushed. And so they couldn't meet everybody's needs. So they said, you know what? We're going to give you $1,000 per employee up to 10 grand as a grant. Just keep it. And when you, and you've heard different things, but when you reapply, when you apply for forgiveness, it doesn't count towards like your money that you got. It's just, it's money you got. It's boom, it's free money. And then there was a loan behind that. And a lot of people didn't apply for the loan, or they did apply for the loan, but you can still apply for that loan. It's amazing. It's up to 150 grand. It's 3.75. If you're a nonprofit, it's 2.75. It's a 30-year repayment, no personal guarantees. The nonprofit that I'm a chair of, we applied for it. We got it. We stuffed it in the bank. There was no payments for, I think, 6 months as a backup because we didn't know what the world was going to look like, right? And the world got crazy in 2020. I mean, you know, just watching the news, right? Every night, you're like, oh my gosh. So, you know, we can just pay that back if we don't think we're going to need it, but we took it. And I helped 4, I think, clients in the last 60 days. A couple of them got 150. One got like 60 or 70 grand on the PPP, on the SBA EIDL. If you did get that money though, in the SBA EIDL grant or the SBA EIDL loan, and you're in a low income designated area, you can get it again. So if you got like 1 to 10 grand grant and you're in a low income designated area, maybe your business is, like a lot of businesses put their businesses in kind of like, you know, whatever, low income rent areas, then you could qualify for another EIDL grant. So that's, people aren't going to catch that. We're going to keep telling you about that. Mike, why don't you jump in there? But I know that those are the things I wanted to hit about it.
Yeah, absolutely. And so regarding the $10,000 advance, Patrick, if you were an early applier for forgiveness, you may have had to put on your application that $10,000 as a reduction of your loan. And so in the new legislation that came out in late December, Congress has verified that, and verified that it was not intended to be deducted from your PPP loan forgiveness. So the good news is the Treasury is going to be returning that $10,000 with interest. So you should be on the lookout for that. The mechanics of how that's happening or when that might happen, I don't know. Okay.
So
But
Mike, if you got say 150,000 PPP and you also got 10,000 in SBA EIDL grant, and you applied for forgiveness too early, even though we tell people not to, they had to reduce their PPP by that 10 grand, right?
that's right.
So you're saying now the government's going to give them another 10, they're going to give them that 10 grand back with interest?
So they got forgiven 140 in your example, right?
Yeah.
Yeah. They owed 10 or gave back 10. Now they're going to give it. Now the government, the Treasury is going to give that back, that 10 back, and it's no longer owed.
I didn't know they were going to give that back. That's nice.
Yep. So that's nice. And here's another one that's interesting. And if you received an EIDL loan and there's a time period, it's January through April roughly. If you receive that EIDL loan, you can actually convert that EIDL loan into your second draw PPP.
Yeah, that's a little complicated. So what happens is the PPP, if it turns into a loan, has really good terms. It's 1%. It's 5 years, no personal guarantees, no collateral. The SBA EIDL loan, though, is a 30-year repayment, and it's at 3.75. So to Mike's point, if you traded that into your PPP, my only thing is, you know, you've traded down on the rate and you've also accelerated the term, which is okay, but just do the math. It could make sense for your business. So it's a nice little twist. I don't know that a lot of people are going to catch, but it's cool, and I just want you guys to know about it. So thanks for bringing that up, Mike.
Mm-hmm.
All right, let's go to the next one. I think we're just about almost there. If you guys got questions, keep them coming. Mike,
Okay,
you want to jump in
so
there?
yeah, so QB. So QB's question, so the PPP forgiveness amount is deductible in federal and state tax return. I'm sorry, the federal tax return. What about the state tax return? State tax return, yes. They're going to, I have not seen any states that are not conforming yet.
Cool.
And you bring up a good point. Just to touch on that, from the start, Congress said PPP forgiveness is not taxable income. For a long time, the IRS insisted that that's fine. We won't tax you on the income, but we're not going to let you deduct the expenses. Congress clarified the intent in this most recent bill that said yes, or said no, IRS. You're not going to get taxed on the forgiveness, and they're going to be allowed to take the deductions on tax returns.
I tell you what, I am really impressed with this legislation because it gave a lot of flexibility for the SBA to fix stuff without everything having to go back to Congress. But this did go back to Congress. The SBA and Congress said that, normally tax deductible things, if you use PPP for that, you'd be okay. And the IRS kind of flexed their muscle back at them. So Congress fixed it. So that's cool. So what I love about all this is even in round 2, there's going to be some weird stuff. And don't lose heart because, Congress has listened and they fixed a lot of the stuff that wasn't right about round 1. Look, chambers of commerce, for instance, were disqualified, weren't qualified to get the money. And then now they are. So we talked about the repayment process for under 150. Mike, let's talk about this nuance about the covered period. I think some people are going to get caught in a trap when they ask for forgiveness. And I'll tee it up this way and hand it to Mike. When you got the PPP, originally they said, take your average monthly payroll times 2.5, which is like 8 to 10 weeks, of coverage because they figured it was payroll and rent. So you had 8 weeks to spend it. And a lot of people were like, they couldn't spend it in 8 weeks. It was a huge uproar. And so they extended it to 24 weeks. But you couldn't reduce staff by more than 25% and still get all the forgiveness. So here's my example. Let's say you got 100 grand and you had 100 employees, and in 8 weeks, you didn't lay anybody off. You use the 100 grand, you're fine. And then you laid off 50% of your workforce. When you go for forgiveness, you're good because you spent the money in the 8 weeks. But let's say that you got 100 grand, you had 100 employees, and then you didn't lay people off until, say, the 10th week, and you laid off 30 people, and you still hadn't spent your PPP. When you go back to do your repayment, you're going to find that might turn into a loan. So it gets a little sticky. So Mike, you might have some client case studies without their names to talk about that. But a lot of times, if you kind of can rejigger your accounting, you might be able to save yourself.
Yeah, so actually I just answered this question for a client and it's a little bit different than this. But they actually had a situation where employees left willingly. Okay. And so one of the things that you want to look at if you have that situation is if somebody resigned on their own, or if somebody resigned on their own, that doesn't count to the PPP reduction.
Correct.
Right?
Doesn't count.
Same thing with terminations for cause. Okay. Now, from what Patrick's talked about, you also have the opportunity to correct that by hiring those people back, or at least giving them offers in order to come back, and whether they accept or not, that still counts as against the reduction of the PPP loan. So very, very important concept for people to understand, but that FTE reduction or calculation is very important.
Mike, did they carry that through for PPP too? I didn't see it anywhere.
I haven't seen it. I haven't seen it, but I would have to think, Patrick, that the way that the law was
Originally, yeah.
Yeah, the way the original, I don't know why it wouldn't carry through.
Yeah, I didn't see it. So here's what I just want to tell everybody. If you're doing your repayment calculation and you have a crud moment and you think you're going to end up not getting full 100% forgiveness, reach out to your accounting person. You can email me or Mike. I don't want to volunteer Mike, but you can email me and we'll help you with that. Yeah.
So some other strategies, on this, a lot of people are just laser focused on payroll as the forgiveness, as a trigger for forgiveness, but don't forget about that 40% of, rent and so on and so forth that is also eligible. So you might be able to fix it. You might be able to fix it that way too.
Hey, can you take Michael's question?
And then one other thing, remember with these new categories, they do specifically apply to PPP1. So
they do. They're retroactive.
They are. So So that
Learn
opens,
something.
to me, that opens the door wide open in order to make that correction. So
Okay.
is another thing. So question.
So the spend, I just want to be clear, I heard that correctly. So the spend, that 60-40 ratio that was in PP1, or you can look back now and you can add additional things into that 40% spend that weren't allowed before to qualify. Okay, cool. Sorry, some of like people like Mike and I kind of nerd out on stuff like that. You may not care, but we're like, wow, that's awesome.
Right.
You're like, what are these two guys talking about? Like they lost me at hello.
There's nothing like revisionist forgiveness, right? It's
Yeah,
just...
yeah.
So
All right,
look,
Michael
okay.
Shaw, go ahead.
So the look back period for the FTE and the 25% reduction is any time pre 2020 as compared to the 8 or 24 that begins. Let's see, I'm not sure I'm understanding this question.
Once you get the money, Michael, that's when the clock starts for the 8 to 24 weeks. But to
Yes.
qualify to get the money, yes, you were using your 2019 payroll. So let's say you took your average monthly payroll for 2019 and it was 50 grand and you got the money on March 1st. Well, no one got the money March 1st. I don't think you got it on May 1st. You had 8 weeks from May 1st to spend the money. And then they extended it. Actually, you had 24 weeks from May 1st to spend the money. So drop your question back in the chat because I'm like, Mike, I don't know if I understood that, Mr. Shaw.
Yeah, so QB, the PPP grants specifically are not considered revenue when you apply for your second PPP loan.
All right. I'm just going
Hey,
to
Patrick.
type the answer to him. Yes, sir.
I'm wondering if the question from Michael actually may even tie into under this repayment that you have here under the highlights, and maybe it's under, I guess, this fourth bullet.
Hang on, I'll just type in Michael's answer.
Okay.
Fourth bullet. Yes. So you take your head count from 215. Okay, maybe you're all right. That's it. I think maybe that was Michael's question. So whatever your say, if you had 100 employees by February 15th, and you took the money May 1st, and you spent it all in 8 weeks. At the end of those 8 weeks, you could have reduced headcount, but you couldn't have reduced it more than 25% unless they were fired for cause, they quit on you, and because they were making more on unemployment. We heard a lot of people that just said, I'm making more on unemployment, I'm not coming back. And as long as you made a good faith effort to bring them back, you know, you're not caught in that trap. That's my best answer on that one. It's hard when I can't like talk to the person live to get a redirect. But I kind of like this. Next time, maybe my wife and I get in an argument, maybe we'll use this system. Then we won't be, it'll just be nice and easy back and forth and casual. And I hear you, honey. Put it in the chat. Can you imagine telling your spouse that when you get an argument?
Put it
in the chat, baby.
And keep it clean, please.
Put it in the chat. Well, we keep it clean. All right. Kubi has some more questions. Just to try to double confirm, the COVID grants are not considered as revenue when apply for PPP. Okay. Here's what I do know and here's what I don't know. If you got SBA EIDL grant or an SBA EIDL loan, or you got PPP, they are not considered part of revenue. But if you got other grants, like Howard County Economic Development gave grants for PPE, which is the equipment. So there's PPP, which is the payroll protection. There's PPE, which is the equipment. And then there's me, I'm 3P consulting. So, you know, there you go. But I'm not sure about that. And I think we're going to hear more direction on that because a lot of state and local organizations gave out grants for COVID related issues, but they may be taxable as part of gross receipts. And that's what I don't know. That's important. So stay tuned for more clarification on that. I'm going to ask that specifically to the AICPA accounting group to see if, because I didn't see that anywhere in the legislation, but reading legislation is like watching paint dry. It's pretty rough. It's easy to interpret things wrong or miss them. And I looked at it pretty carefully and I didn't see it in there. So QB, great question. Just more on that. Just know that If you didn't receive any other grants and all you got was not all, but if you got PPP, SBA, or SBA EIDL, if those are the only things that you got, then you're fine. They're not going to be considered income. Other grants may, we'll see. So like I think of nonprofits, a lot of them get regular grants and that's regular revenue. But when they got these exceptional grants for COVID, how are they going to treat that? We'll find out. It's
Yeah,
still early.
so one point that I do want to make, Patrick, is the IRS is coming out with all new forms for these applications and for the forgiveness. So make sure that you check with the SBA's website because these forms literally just came out within the last few days. And I know that what I'll call the easy form, that's not the official name of it, but the easier form for the $150,000 level of forgiveness is supposed to be out in the next couple of weeks. If you're at or under that $150,000, I'd encourage you to wait to apply for forgiveness, as the form will be much easier.
Yeah.
The new form will be much easier.
Yeah. So in theory, if you're trying to stage it, you're like, I used all the PPP round 1. I haven't applied for forgiveness. Can I apply for PPP round 2? If you qualify, answer is yes.
Right. As long as you've used the PPP-1 funds.
Yeah, but I got a feeling, don't fret. A lot of banks may say, well, it's too disjointed. We just want you to apply for forgiveness too. So your bank, if you go back to the same bank for round 2 that you went to round 1, it should be a lot easier. Most of the banks did a really great job.
Yeah, kudos to those bankers, because I know that there were some crazy hours that were being worked during this first round and during all these amendments, and I suspect it's going to happen again.
I got in trouble with, I spent years in banking, and the joke about bankers working, like whatever, bankers hours.
Yeah.
So I was joking with the bankers. I said, there are reports that some bankers are still in their office at 5:15, and some have even come in before 9. And of course I was joking, but the bankers were working like 18 hours. And I said, well, now you're just like the rest of us, like, entrepreneurs, man. Like, we were working till 10, 11 at night. It was crazy.
Yeah, we're working tax season hours now, huh?
Exactly. All right. What else we got? I think we're near the end. How are we doing on time? Oh, my watch says time to get up and get moving. I guess I've been sitting too long, 45 minutes. Can you advance the slide, please? So if you're in a low to moderate or low income community, then you may be able to qualify for another SBA EIDL grant advance, which is pretty cool. You have to have a 30% reduction, not 25% in revenue. So more on that. The link to the SBA EIDL program is here. It's not hot yet, meaning that they're not taking like second draw SBA EIDLs, but you'll have the link. You just keep hitting it and then you'll fill it out and they'll tell you if you qualify. So let me give you an example. Like I'll use Annapolis. You can be on West Street in Annapolis and you can be in like $1 million house. But you can also be right next to a low income housing development, and you might be in a low income community. So, or your business might be. So you never know. Just because you're in Howard County or you're in Anne Arundel County, it doesn't necessarily mean that you're not in a low income area. You may be, or your business district may be. So you can go to the next slide. And I think that is next slide. So you'll get this, everybody will get an email of this. Look, I could probably put 100 different resources on here and we'll load these up and the chamber will send out more stuff on resources. I just kind of put these together on the ones that were most interesting to me. The application form is here. If you're a nerd and you want to read the interim final rule, like guys like me and Mike, well, I'm not going to call Mike a nerd, but like I read that stuff. It's like 150 pages. It's there. So if you need to prove something, that's great. Do it. If you're if you're a minority owned or veteran owned business, there's some other programs for you. There's tons of other programs out there. There's programs for live venues and things like that. There's the food service grants. There's the Howard County Economic Development Authority, and the list is going to go on and on. Like I said, just link to the chamber, link to Howard County Economic Development, and you will be informed. Turn off CNN, turn off Fox, turn off all those things. Just like, listen to the chamber. Get away from the news. Oh boy, it's been crazy. All right. It says, thanks for a clear. Okay. Thank you, Michael. Best one you've been on. Well, we try to make it fun, Michael, so I hope you've enjoyed it. Coming to you live from New York, Thursday afternoon live. I think that's it. Leonardo, do you want to take us out? Oh, we can't hear you.
Yep. I think we're off mute now. And so definitely want to thank you guys for sharing with us this afternoon. I think that, again, I think the dialogue and the questions and so forth, again, was great. And hopefully everyone on here had an opportunity to see why we certainly had the two of you come in and join us today. And so just want to, I guess, remind people of a few things coming up chamber-wise and encourage you to visit our calendar on howardchamber.com for some of the upcoming events. I think one of particular note is coming up on January 27th, and that's our executive speaker series, which as we talk about COVID and as the vaccines become available, one of the decisions that businesses will have to make is ultimately what type of requirements do they put on their employees, or do they put any requirements on their employees as it relates to being vaccinated or not. So as an example, certainly you've had hospitals and some medical, some health providers may have required employees to have flu shots as an example. And so what are some of the things maybe you can or can't do, or some of the things you need to consider as the COVID vaccine becomes available? So we've got a great panel assembled to talk through that, representing multiple industries. We've got KCI Technologies, which is engineering. We've got Moburn Lighting, which is manufacturing. And then we've got Hudson Coastal, which is a local restaurant. And then we've got an attorney with an HR consultant that's going to facilitate all of this. So again, we're going to have, again, a tremendous conversation as to all of these companies that I just referenced. Some are doing business in multiple states. Some are running multiple shifts. Again, you've got professional services, you've got restaurant. So you've just got a lot of dynamics at play. And so we're going to discuss a lot of the questions that you'll need to be asking yourselves in the days ahead. So with that, thank you all for joining us. Thank you again, Mike and Patrick, and thank you to our 2021 annual sponsors. And I hope to see you all soon. Take care.
Thanks, everybody.
Good job, Patrick.
Thanks, Mike. Thanks, Leonardo.